Welcome to Financial Modeling and Valuation with Excel. Becoming a financial modeler is like becoming an architect. Construction of a building requires little bit of technical expertise and some basic level of the operation and the logistics, how it works. In similar way, you have to be little bit having the blend of knowledge on the Excel and the financial statements of a company. So you should know two things. First is that you should be having a little bit of familiarity with the Excel, where 20% of knowledge is required. Plus, the main thing is that we should know something on interpreting the financial statements. Financial statement of the company is very important because these are the key crux that we'll be into. So we should know something on 80% of financial statements because we will be doing with the projections or the estimations that we will be doing with the help of the financial models, right? So estimation to be done with the set of the financial indicators, which is nothing but the firm's performance indicators that I refer here. Now, two things when we talk about is that term called model. So talk about financial. First, we talk about what is a model. So when we talk about a model, it is nothing but it's a representation of a reality, or we can say a simulation of a real world. You would have observed the flight simulator where the pilots have to get trained before operating a real flight. So that is the part where they will be put into the simulation test, where the turbulence, the air movement, the pressure that they have to build, and they have to just properly put their entire skills and effort in a particular situation, or I can say a scenario, right? So model is a representation of real world, right? So as I taken the example of the pilot, right? So pilot, normally they have to go with the simulation training, okay, before being a pilot of a aeroplane, right? So this is very important. So they require a certain set of skills to get into that, right? So model is like a simulation where the real world context has to be brought down with the set of variables we have, and with the set of scenarios put into scenarios. So scenarios to be put into that. So suppose what is the worst case scenario or the best scenario. That could be the situation. If you talk about the business performance, every firm will react according to the nature of business performance. Maybe the business will have a recession side, or the business have a better growth, or the business may react opposite to the recession. So it may change depending upon the situation. So we have to be a little bit familiar with how actually the firm will react or behave, the economic indicators that it has. Second thing is that here we have combined the term called financial plus model. So when we talk about model, we are it's a representation of reality. So here financial, we refer the financial is nothing but the company's performance of past and present and future. Past, present and future performance of a company to be known. So in context of financial model, we will be doing the future performance, the expectation of the company's performance. What could be the sales, what could be the revenue that company is going to generate. So these are the things that we are going to do the estimation with the help of the financial model. So because when we talk about model, it could be a mathematical model, it could be a statistical model, and adding of some risk indicators. So the model gets more complicated depending upon the requirements client requires, right? The client may require the basic model where he only expects only the income statement and the balance sheet to be projected with the set of growth factors, or suppose he require the intrinsic value of the firm to be created, then we have to apply the DCF model, discounted cash flow model, which is the universal model where everyone applies it and creates the valuation of a company, right? So you should know something about the indicators, or I can say the model parameters. Model parameters. So model parameters, will be doing some input variables. With the help of input variables, this input variable will be put into test, right? So this will be tested. Input variables, normally we talk about the macroeconomic or the microeconomic factors. So these factors are the input variables where we'll be doing the input of this one. Then this will be tested with the historical statements. So historical statements, nothing but we'll be pulling out the financial statement of the firm. So these are the main thing that you have to remember. Next thing is that when you talk about the financial models, you should know something on the elements of financial models. There are some requirement of the elements that we have to little bit familiar on that. So normally in corporate finance law, we have already familiar with the financial performance, financial indicators. So normally first thing is that the revenue. So revenue is very important. So we talk about the revenue. So revenue is the first element of the financial model that we require. So normally what does the revenue means? It gives you the how far the business is generating the revenue, how much revenue is being generated by the business, how much revenue is being generated by the business, right? And the second element we talk is on COGS, that is nothing but cost of goods sold. So it's nothing but cost of selling your product or service, So every company has to know how much cost does it incur in order to sell its product or service. The next element we should be more familiar with is the daily expenditures. That is nothing but the operating expenses a company has, right? So operating expense is nothing but the day-to-day spend or the day-to-day running of a business. It requires the expenditure to be done. So how much the business is spending in running its day-to-day operations. So this is very important because this is the crux of a business that we should know. Then we should know something about the income statement. So income statement, how much is the net profit of the business for a particular time period, right? So how much is the net profit for a business or I can say during a time period. This has to be known to us. Then we should know something about the cash flows. So because we are mostly familiar with the accrual basis of accounting, but accrual basis of accounting, we normally expect that we will be doing a recording into the books if whether there is a credit sales takes place or whether there is a cash sales takes place. We normally debit into our account, right? We record into the books whenever there is a transaction is happening from the business from one entity to another entity. In case of cash flows, main thing is that the liquidity need of the business is very important. So you should know how much cash the business generates. This is very important. So how much cash the business generates. It does not mean that you have done for 3 months you have done a credit sale and you find that there is no cash is coming back, or you're not recovering the cash from your debtors. Okay, the sale that you have made, credit sales that you have made, the debtors are not paying back your money. Then it means that this will be the little bit of factors which will be affecting your performance of a company. Then next thing, element that you have to know something about capex. Capex we mean here is nothing but the capital expenditure. So how much capital expenditure the company has done, right, for acquiring the physical assets, physical assets. So if you talk about the automobile sector, where the company has to buy heavy machinery, how much heavy machinery they have to spend, how much capex they have invested in that, and how much of that particular machinery has been put into operation for getting the future benefits from the machine. So that is what we have to know, right? Next thing, we have to know something on the balance sheet. So when we talk about balance sheet, it's we know it's a summary of companies' assets, liabilities, then the shareholders' equity at a given time period. Then we should know something on working capital. That is very important because day-to-day expenditure has to be taken forth. Okay, how well the company is managing, how well the company is managing the current assets and current liabilities. So these are the key things that you have to remember. So these are the key part that you have to remember. These are the key elements that a financial model requires. So first thing, you have to be a little bit familiar with it and how the variable is getting affected in your financial statement. What will happen if there is increase in cash flow? What will happen if there is an increase in working capital? What will happen if there is an increase in revenue? What other variables will get affected? So these are things that we have to be little bit familiar with it. Little bit of familiarity is required, right? So this was the elements of financial models that we have discussed, right? Next, we are coming to the approach of financial model. Approach of financial model.